So in today's video, I'm going to take on a topic that a couple of people have asked me about, and that is it possible for a company to cook its cash flows? In another video, I take a look at how companies can play around with their profit figure, and a lot of people think, well, the solution to that is to treat cash as king. So you go to a cash flow statement and you look at the quality of a company's profits by judging how much cash it's generating. But there is a problem. Although cash is king, you can't really argue with cash. It's less subjective than profit. There are one or two ways that companies can be a little bit creative with cash. In other words, they can boost what appears in the cash flow statement, short term at least, and make you think they're doing better in cash flow terms than they actually are. So what I thought I'd do here is, rather than try and take on all the ways that a company can cook cash flow, I thought I'd look at, say, 5, just to give you a flavour as to what sorts of things companies can do to boost their cash flow, just as they like to boost their profits. Now, in another video, I deal with the issue of what is profit compared to what are cash flow statements, so I won't labour that here, but suffice it to say, if you've not seen those, the cash flow statement is designed to capture a company's cash flows over a particular period. So I'm going to make up some dates here. All right, I'm going to just say that my financial year end is, let's say, the 31st of March 2013. Yeah, it's coming up fairly soon, obviously. That means that my last one would have been 31st of March 2012, and my next one coming up in a while will be 31st of March 2014. All right, so we're going to focus on this one here. Let's say that my reporting year end is coming up, my financial year end, and I'm looking to prepare a cash flow statement for this period here. I'll call it a cash flow statement, CFS. All right? And I'm looking for ways to boost it. So I want my investors to think I'm generating lots of cash flow up until the 31st of March 2013. Because remember, in my annual report and accounts, I'll be giving 1 year's cash flow statement. Okay? And in one or two other videos, I explain that concept. So here, let's assume I'm reporting up to the 31st of March. I'm looking for ways to boost cash flow in this year. Now, it might be at the expense of next year, but let's say I don't care so much about next year. I want to impress my investors now. So how am I going to do it? Here are a few ideas. Okay? Some obvious, some slightly less obvious. All right, number one, very, very simple. I could make sure that if I'm planning to sell an asset, that'll generate some cash. I sell it before the 31st of March, even a few days before. Okay? And if I'm planning to buy an asset, which will use up cash, I do it just after the 31st of March. All right, this could be just a few days apart. And you might think, well, who'd go to all that trouble of making sure the contracts for the assets are dated in that way? Well, it could be worthwhile, because you could be, for a company, talking about millions of pounds or dollars. So by just changing the timing of when I sell big assets, okay, as compared to buying big assets, plant, machinery, equipment, and so on, land, I can influence my cash flow statement, because I can boost it this side of the year, even if the cash is going to flow out to buy those assets the other side of the year. So there's one little trick, okay? And there are various other little tricks, this is number 2, that you can employ to make this year's cash flow, that's this side of this line over here, okay, look a little bit better. All right, what could I do? One way would be delay paying my creditors. I may have a queue of people waiting for money here. If, and quite literally I've seen firms do this, if I write the check but stick it in the top drawer and then post it after the 31st of March, what effect does that have? Well, it means that at the 31st of March, my cash balance will look a little bit higher. I'll have some outstanding payables in my balance sheet, and I deal with balance sheets in another video called What is Balance Sheet? What is a balance sheet, by the way? It'll make my payables look a bit higher, but I don't care. It's cash I want to boost. It's called window dressing. Okay, so not paying my suppliers or just waiting a little bit. Here's another one. I could factor my debts. Sounds a bit grand. What does that mean? What it means is, basically, I send not terribly nice people, in some cases, off to chase money that I'm owed from customers. It's called debt factoring. It's when I can't squeeze money out of people who owe it to me. Okay, so I send someone else off to do it on my behalf. So by factoring debts, as it's called, and delaying paying creditors, I'm just squeezing a bit more juice in cash terms out of the year before the 31st of March. Okay, some of these ideas will come back to haunt me next year, but remember, I'm not worried about next year. I want to make things look good now. So there's idea number 2. It's called window dressing. Okay. Idea number 3. Okay, I could think, oh, assets. Okay, assets are going to use up lots of cash if I buy new stores, buy new plant and equipment. So, very simple solution, start renting them instead. Companies that rent a lot of assets save big cash outflows in the short term, even though, of course, renting assets is going to see cash go out in the future. All right, so watch out for firms that switch from a policy of sort of buying assets to suddenly leasing or renting them, because in the short term at least, that'll stop those big cash outflows, those big checks being written to buy assets. Right? Think about the difference between hiring a car on holiday and buying it outright. Quite a big difference in terms of the cash outflow. Okay. Another trick is called the sale and lease back. Now, that sounds a bit terrifying, sounds a bit sort of accounting speak, but it does what it says on the tin. Okay, I'm looking around for ways I can raise money. So what I do is literally I could sell the building that I actually is my head office, that I actually operate out of. You might think, well, wait a minute, if you do that, you've got to move out. Not necessarily, because I can cut a deal with the person I sell it to that I rent it back from them. In cash flow terms, that gives me the cash from the sale. Admittedly, it ties me then into some kind of rental arrangement that will see cash go out in the future. But remember, I'm looking to boost short-term cash flow. Okay? And here's a final thought. When you're playing around with cash flow, which figure is it that you want to impress your investors with the most? All right? And here's the answer. Cash flow statements. As you'll remember if you've seen my video, what is a cash flow statement? So I'll keep it quick here. Cash flow statements. Okay, there I am again. Cash flow statements can be divided into 3 sections. Okay? The number that analysts and investors like to look at is called the operating cash flow. Then there's something called the investing cash flow. And then there's something called the financing cash flow. And all that adds up to an overall total. Cash in or cash out for the year, so to the 31st of March 2013. So the cash flow statement split into cash inflows and outflows to do with the core operations of the business, those to do with investing activities and those to do with financing activities, raising cash through share sales, debt and so on. So here's a thought. What you want to do ideally as a finance director is boost that, because that's the number that people tend to spend a lot of time looking at. Okay, people say, it's crucial that a company is generating good, strong operating cash flows, because that's like the day-to-day business, that's like the heart of the business. So people tend to focus on the number at the top, quite rightly in a way, much more than the numbers sort of in the middle and the bottom. Okay, and these come with lots of subheadings, as you'll have seen if you've watched my What is a Cash Flow Statement video. So, finance directors want to boost that number, and they don't really mind if it's at the expense of these two, because they know investors are going to be watching the one at the top. Okay, so how can you do that? I'll give you a couple of ideas, just a couple of ideas to round off the video. Number 1, you buy cash generative businesses. All right, now these businesses may be rubbish in all other respects, okay, but if they're nice, steady cash generators, what that does is it starts to bring cash into the cash flow from operating activities. Now, some of you will be thinking, wait a minute, if you buy a cash generative business, surely there's a cash outflow when you pay for it. Yeah, there is, but it's down here. It's in investing activities, the number I said that investors pay less attention to. And of course, the cash that business starts generating for you when you own it straight away is pumped into this top line. So there's a little sneaky one to think about, buying cash generative businesses. They may be terrible value in all the other respects, but they do bring in the cash, okay? And here's another idea, slightly sneakily reclassifying cash flows, from here to here, cash outflows in particular. All right, so I've had a rummage around in the past through the accounts of Netflix versus Blockbuster as was. I found something a little bit weird, which is the treatment of DVD purchases in those two businesses. Okay, is the purchase of DVDs an operating cash outflow, so it hits that line, or an investing cash outflow, so it hits that line and doesn't hit that one, so boosts that line? Can you see that where you put that is going to matter if investors are focused on that number? Okay, and in one company, Netflix, I've seen them classified in the past as investing, whereas in Blockbuster, just for it went under, I've seen them classified as operating. Now, that makes it quite difficult to compare the two companies. And there may be perfectly good reasons, I suppose, why there's a difference in that classification, but you can see the temptation as a finance director. If you know investors are going to focus up here, you don't mind sort of trashing these numbers a little bit in order to boost that one. All right. Now, that was all fairly fast. I'm not trying to turn you into a cash flow expert. This isn't an accounting degree course or anything. But what I wanted to do is just answer a question that I was sent by a couple of people saying, look, Tim, you've told us in the past in other videos, what is profit? How profit can sometimes be played around with. When you say cash is king, are there any ways that cash can be played around with too? And I've suggested 4 or 5, they're not the only ones, but 4 or 5 ways that you can play around with the company's cash flow. Now, if you missed it as I went through that, a few extra other videos you could take a peek at, which might help fill in some of the background here. One is called, not surprisingly, What is a Cash Flow Statement? Okay. There's another one out there called What is a Balance Sheet? And a third one that's well worth a look is What is Profit? And hopefully for those people who found that a little bit quick, those will fill in some of the blanks. I look forward to seeing you next week.